As the market pops up on 24th January 2022, I find it interesting to revisit the chicken and egg story. Whether rising prices triggered inflation or inflation triggered rising prices. From a value addition perspective, the cost of printing a 2000 rupee note is under rupees 4, and that of a 500 rupee note is under rupees 3. A 500 times or 167 times value creation. But is this destroying value? If you look at Venezuela, it tops the table for global inflation, which was close to 3,000%. And as per the latest estimates, it has slowly come down to 686. Lebanon with 137% and Zimbabwe at 162% are also very high inflation zone countries. Japan seems to be holding on to the price line with a negative inflation of minus 0.17%. But the moot question is it destroying value at both ends? In psychology, the extremes always mask attributed documented behavior. And is a similarity here in the high and low inflation zones in terms of value destruction? We need to answer ourselves. The neighborhood Sri Lanka is staring at a likely sovereign default, and rating agencies have already downgraded it to CC, very close to the default rating of. Do they recollect that India shipped gold to UK 3 decades back when we were facing a similar situation? The US markets exhibited nervousness with the initial jobless claims numbers coming much above the market expectation at 286,000. Nifty shed 4% week over week, and the benchmark 10-year US Treasury bond yield rose to 1.80%. Brent rose by another $2 to $87 per barrel, and gold rose steadily to $1,840 per ounce. During the last 2 weeks, gold has always traded above the support line of 1,800. The undecided investors may have a fresh look at sovereign gold bonds or gold ETFs at current support above $1,800. The Indian rupee shed 28 paise week over week to close at 74.43. The dollar reserves of RBI, though, rose by $2 billion during the week. With FIIs continuing to be net sellers for more than 12,500 crores cumulatively during the month, Next week, rupee could see a range-bound movement. Is the expectation. Nifty shed 3.5% to close at 17,617. And the VIX for volatility of derivative contracts spiked sharply by 233 basis points to 18.89%. The new Indian 10-year benchmark also traded higher at 6.62%, while the 3-year interest rate swap point was elevated by 5 basis points at 5.28%. As central banks are facing the music of expanded balance sheets and unbridled or the purported value creation through unbridled printing of currency, let us check whether the currency is safe in our pocket. Have an interesting week ahead.